Good morning, everyone. Thank you so much for joining. We here at Harvested Financial are talking about the markets, and the reason I've got my hoodie on is the suits against everyone else right now. But we're about to talk about GameStop. But before I totally get into that, I want to make sure I give my brief disclosures here, and that's that all the information, commentary, and opinions expressed on this or other websites or on any other social media platforms or in any other media formats reflects the personal opinions, viewpoints, and interpretations of the employees providing such comments and are not considered to be a description or offer of advisory services by Harvested Financial. The opinions expressed are for general informational purposes only and not intended to provide specific advice, recommendations on any individual security or specific investment product. It's intended only to provide education about the financial industry, and in no way is any content on this website meant to convey investment advice, performance data, or any specific recommendation to buy or sell. We employ multiple methods of analysis here at Harvested Financial to create client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss, and users should discuss any decisions with their financial advisor. Past performance is not a guarantee of future results. Boom. So like I said, good morning, and let's talk about GameStop. I ditched the collared shirt, I put on my Harvested Trucker hat, and I got my hoodie on because today, like I said, is about the people versus the suits. And we are going to look at no other stock than GameStop that's been absolutely all over everyone's radar. We've had articles across the media talking about it. We've had chat rooms blowing up. Everyone's texting with all their friends who are into the markets, talking about GameStop, what's going on. So what's going on? Well, we looked at the options this morning, and actually they listed a bunch of new strikes. So let me go ahead and share my screen, and we'll talk about how they listed a bunch of new strikes today. So we have strikes all the way up to 570 in here today. Stock's trading around 355, which is up a little bit. Trade as high as 450 in the early market action. So I think that's probably why we got all these additional strike listings. But we're also seeing some really interesting things coming out of many of the retail brokers. Robinhood actually announced that they will not be taking opening orders for any of the Jan 29 expiration options. So those are the options that are just expiring tomorrow, and they will not be taking any opening orders, only closing orders. So really interesting times going on here. Very interesting to see a brokerage be the one to step in and decide what their customers can and cannot trade. So market's rallying big time in the background. We got the SPOOs up $4. SPY's up $4, I should say. That's almost 1%. And IWM's up 1.3%, and which is $2.82. And the Qs are up just under 1% or $2.87. So GameStop, since I've been talking, was up $4. Now it's up $30. A lot of movement here. So, we can't necessarily talk about the implied volatility for a one-day option. Implied vol of over 1,000 is of course ridiculous. But even if we go out to the Feb 19 expiration, we're talking around a 530 vol. So 530 vol is absolutely nuts. If we want to talk about what kind of percentage moves on a daily basis that is, I'm going to take, wow, it's 605 vol on that. So, even the vol of vol is moving around. So let's do 600 divided by 16. That's 37% a day is what that's expecting to move. So we can also think about that in terms of the straddle. So if I'm looking at the 370 straddle, can be out the money for about 5 seconds the way this thing's moving around. But that's trading at $385-ish, something like that. Whopper. These markets are, all things considered, relatively tight, $4 and $5 wide. Actually, on the puts, we're seeing them almost $20 wide. So things are really going to be moving around. Execution is going to be quite dicey. But what can we talk about doing in something like this? Well, with implied vol so high, one becomes very inclined to sell. Of course, you want to sell in an incredibly defined risk way and make sure you're not, taking on too much risk. But where do you start thinking about selling? The 570 call in February, so 22 days out, that 570 call is trading 130 at 139. The highest strike on the board, you have to outlay 15 grand to get into that option. So some pretty nuts moves going on here, or at least expected moves going on. So if you want to have a really defined risk spread, it's kind of hard. If I sell the at the money call here, so if I'm going to sell the let's go up to 370, say. So if I sell the 370 400 call spread, that's a $30 vertical, means the most I could lose is $30. I'm only collecting $7 for that. So this is almost an at the money vertical that I'm collecting almost $7, only $7 to lose up to 23 if that goes up above 400. That doesn't seem like the best play here necessarily. That's kind of what a really high implied volatility is going to do, is that it's going to mean that your options are very like. So when we talk about like options, we talk about options that are close in both strike and close in sort of expiration date. So when implied vol goes so high and so crazy, all of the options become increasingly alike. The difference between, in the delta between these two options is actually only 4. So I'm looking at 79 delta at the money. It's in the money now. Stock's already up to 395 versus a 75 delta, 30 points higher. So because of crazy high volatility and the absolute breadth of possible outcomes that's implying, these two options are going to be very similar. So there's not going to be that much of a price difference. Now even as stock rallies so much, this call spread is completely in the money, but it's trading for $8 right now. So it's a lot of really, really crazy pricing action going on here. So I would very much caution anyone getting out there to be very deft in the way we're handling these. But let's look at volume, because people are getting in here and playing. We're actually only seeing a couple lots on either line, 200 lots back in Feb. Some action in Jan, although not much. In many ways, I suspect that Robinhood lockdown of the accounts is really causing people to limit their trading activity. This probably is a lot of closing activity just because we're seeing it in these low strikes. People closing out their 100 strike, 105, 140. So much of this might be closing, but it's really hard to know until we take a look at the open interest that will come out tomorrow. So if you're thinking of doing something, while you're inclined to sell because of high volatility, maybe a call spread is actually the right thing to buy. So let's think about what that would do. So if I buy the 400, now the at the money, we started at 350 at the money a couple minutes ago. That 400, 420, that's going to be a popular strike, means I can buy that 400, 420 for around 510 in midpoint value. But I mentioned how tight they looked a little bit earlier. These legs don't exactly look quite as tight, and I think that's probably because of some increasing price action. It's almost a $20 wide market. So actually, well, no, it's more. I got $15 here. I got $15 here. It's a $30 wide market. So yes, we think that theoretically should only be worth around $5, and maybe that's a good play. Pay $5 to potentially win 15 if that spread hits its max value of 20. But execution is going to be really important, and making sure there's someone to take the other side, because that's what it all comes down to in trading. Is there someone to take the other side? And I think that's one of the most interesting things about this GameStop scenario, is that there is not necessarily someone to take the other side of the selling. After Citron and Andrew Leff got completely blown out and had to close their position, Melvin Capital is also talking about closing their position. There's no one to sell anymore. Who wants to go out there and be the provider that's going to sell this when you have an army of people who are buying and committing not to sell? So it's a really interesting dynamic going on in the market, and I think we're going to see price action all over the place as sort of the market works out the kinks. This is certainly not the last time there's going to be a crazy thing happening in the market. We've seen a lot of changes in the markets over the years. We've seen a lot of regulatory actions to respond to this type of thing. Well, I don't necessarily mean to suggest there's anything undue going on here. The market will react, and dealers, liquidity providers, whoever needs to take the other side of this is going to adjust. So we're witnessing something once in a lifetime here. I'd encourage everyone to take a look, be careful, and absolutely, as Alexis Ohanian made sure to highlight, founder of Reddit, is that don't make any risks with money you can't afford to lose. Options are particularly a speculative investment in a case like this. There's not necessarily the risk management opportunity that we see with a lot of other scenarios. So certainly be careful out there when you're trading in GameStop. But this is full on the people versus the suits, and it's a pleasure to watch. So we will be tuning in tomorrow, 8:35 Eastern. Stay tuned, because there's going to be a special guest again. And in the meantime, be sure to check out our Twitter for good content at harvested_DAFE, because derivatives are for everyone. Make sure you mash the subscribe button, because there's going to be a daily bread coming out every day where we talk about trade ideas, and we talk about how systematic execution can deliver the power of options to your portfolio. So happy trading out there, everyone.